Yeah, boy! So I went to start the stream, and then all of a sudden, YouTube goes black. Live stream's not available. Try again. So you click the button, nothing happens. Click the button, nothing happens. Click the button, nothing happens. All right, refresh the whole page. So anyways, thank you, YouTube. We appreciate you, YouTube. So, hey, welcome to Forex.Today. We are a community of 14,000 foreign exchange traders stationed around the world. We're about to get it on. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. G'day, mate. Hello, hello, hello. How are you? How's your mum? Good to see you, everybody. Happy, I think it's a Wednesday. Cool, happy Wednesday. Must mean it's oil inventories day. Very nice. So, CAD will probably move, oil will probably move, and all that kind of stuff. Oh, looks like I'm going to have to pop the chat. I have it down there. Anyways, welcome to Forex.Today. Please ask questions. Please take notes. What we're going to do today is a little bit of technical analysis, a little bit of fundamental analysis, but a whole lot of teaching you how to plan your trades, staying patient and disciplined to carry them, to execute them properly. Treat your other foreign exchange traders with dignity and respect. Please thank our sponsor, tradersway.com, tradersway.com. Visit tradersway.com. Open up a demo account. Download MT4 or MT5. Play some execution trades and give them an opportunity to earn your loyalty and respect. They actually execute your trades fast, right? Your spreads are narrow, your swaps are huge, world-class customer service. Just give them an opportunity to earn your loyalty and respect. That's how you pay it back. These webinars don't cost you money, but there is a fee. And your fee to the Cool Kids Club is your obligation to visit tradersway.com. Cool. What else? Did I say treat people with dignity and respect? Yeah, so if you got negativity, check it at the door. Most likely we'll cover Euro, USD, USD CAD, Aussie dollar versus Japanese yen, maybe Canadian dollar versus Japanese yen, maybe Kiwi dollar versus Japanese yen, maybe Great British pound versus US dollar, maybe, I think I said Euro dollar versus European euro, the European euro versus the US dollar. So lots to cover today. Probably some gold, probably some oil, probably some Bitcoin. But if that doesn't get you juiced, just ask. And I'll do my best to serve. Hang on. I got to pop my chat. Cool. Nice. Let the chat load. Okay, good. Now I can sit you. Gold hit 1800. Yup. You thought I was with FX Street. Well, I've been working with FX Street for 16 years, I think it is. Okay, I've been a speaker. I've been a speaker at FX Street for 16 years, but that's it. That's it, only 16 years. Okay, cool. So here we are. Here's somebody's nightmare, and I know whoever said that yesterday has totally regretted it. But I'm making a point. I'm not trying to punish. I'm a lover. I'm a lover. So I'm not trying to punish. But what I am trying to do is get through a point. When nothing happens, it should not be a nightmare. If you're losing money in here, you got problems. And we can fix those problems, but that's that. So very interesting. Here's the hot and fast OOP. There's the counter trend, and then here's the stall out. Cool. So none of this really should change your bias. Okay. If you look at it here, or if you look at it here, okay, let's do it this one. If you're looking at it from this point of view and you're a bear, you're loving it. Okay. If you're looking at it from this point of view and you're a bull, you're loving it. And you're like, well, Wayne, which one's right? They're both right. It's only statistical analysis, right? Okay. So which one do you do? Yeah. Which one are you? Okay. So in this case, remember, you want to know what you want to do and then set up plans to do it. So if you are a bull, you're looking at euro dollar in such a way that it was bouncing on obvious support last week, bullish support. And then there's your Friday front run. There's your Monday open, both of which are bullish. Here's the target for the out of position trade. So now there's your exit. And now you're trying to discern, would a bull re-enter bullishly? Well, one of the ways that you handle this as a bull to re-enter a bullish trade, assuming you've confirmed with your deep technical analysis that it's still a bullish trade, right? If the market's now bearish, then you don't have it, right? You don't have a trade. But if you say, well, the market is still bullish, okay, now you have a chance to re-enter. So maybe you see this level here, okay? Maybe you see this level here as a supportive level. Maybe you see this pivot here as a supportive level. Maybe you see the 200 EMA as a supportive level. Okay? But right now, all you're doing is playing off of the midpoint psych level. We dropped from 113.50. Now remember, at 113.50, 100 pips ago, I said your day was over. 100 pips ago, I said, we started the webinar, we were right here at 113.50, and I said, if you're disciplined, you exit. That's factual. Okay? So now you're trying to figure out what should you do. Now, you may have bought here, you might have bought here, you might have bought here. Maybe it's frustrating, but not a nightmare. Nightmare to me is you're losing money. Okay? This is frustrating, but you're very, very slowly making money. But it's summer, dude. Okay? Okay. Are you guys okay with slowly making money? Can you handle it? You say you can. You say you do. Uh-huh. You say so. Uh-huh. It's difficult, though. I get it. Okay. Cool. So you're stepping up here if you're a bull. I hope you appreciate that. And bulls are going for this. And it's going to get really tricky. I think if you can get through 13, we're going straight back to 1350 without too much trouble. Oh, right on, Banda. Well, I guess that's why I'm here. I hope you've opened an account at tradersway.com. Masala says marathon's better than a sprint. Well, yes and no. You got to know when to bust out. Even when you're a marathon runner, you need to know when to bust out of the pack. That's how I look at it. Okay, you got to know when to leave the pack and, hit the gas is what they say. Even if you're a marathon, right? Even a marathon runner has to know when to go. Get out there, take the lead. Yeah, and I prefer like redlining it. If it doesn't say, right? If there isn't an 8 in the red zone, you're not even close. So anyways. Okay. Now, I'm going to change this up and rock your world. Oh my God. Because you might have just said, oh, that looks so bullish. That was so amazing. That's so easy. And then you're like, I switch it. And now you're like, oh, that looks down. Okay. Okay. If this heads down, you're going to get something like this. Okay. Check this out. This is one standard deviation of the market mean. This is one standard deviation above the market mean. This is one standard deviation below the price mean, and one standard deviation above the price mean. So if you connect these things, let's do it this way. Okay. If you connect these price and market deviations, it ends up being essentially the same thing, huh? So I think if you were a bear, you would look at it through a similar lens, and you'd probably think, yeah, no. And Blue Boy, yeah, exogenous shock. Well, yeah, it's hard to say it 3 times fast, but I was in a class, I think it was called International Political Economics, and my professor was a rock star Harvard professor, kind of guy that has a million books, goes on TV all the time. You probably hear him on, podcasts on NPR. But dude, this guy would drop the exogenous shock bomb like 3 times in a class. So I remember leaning over because to the person sitting next to me, and I'm like, "Hey, you got to do a shot of tequila every time he says exogenous shock." So, anyways, okay. So, anyways, I would, right? So that's that. That's how a bear would look at it. But I'm a bull. So I look at it that we were in a hardcore rally, a for shizzle, right? A for shizzle down. We knew this was coming. I talked about it. I even went on vacation because I told you it was coming. And then we have the consolidation period, and I'm pretty sure you knew that was coming, right? And now you have to ask, are we in a resumption here? Yeah, that would be a very good question. Of course, I don't know, right? I don't know, but we have to make these decisions. So the decision here is really, is this what is going to happen? And then when we are up here, do we head up, or do we head down? That's pretty much it. That's what you have to plan until September. Okay? Cool, huh? Right? You guys remember? Out of position, hot and fast, hit targets early, massive profit taking into consolidation. Cool. Well, there you go. Not a nightmare. Okay? It's just a beast under your bed, in your closet, in your head. Yeah, it's just in your head, Bubba. If that's a nightmare, you should know the monsters under your bed or in your closet. You know, like a jump scare, right? It's just a jump scare. It's just psychological, man. You know it's coming. Doom do dee dee doom do doom do dee dee doom do doom do dee dee doom do 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 do. Okay. Anyways, so that was that. Euro buck. I'm gonna go back to the yen yens. So let's do this one. Remember, I said the key to surviving this trade is staying above this pink line. Also, what we talked on Monday, so now it's Wednesday, but what we talked about on Monday was the CAD was going to move on Friday. I just don't know which direction, right? But I'm hero or zero. Okay. So maybe Friday's payday on this one. Hey, Banda, if you're talking about the chart templates, I don't know when the last time you've been to MetaTraders, but about a month ago, I gave everybody a free upgrade. I just haven't told anybody. I've just been so busy. I haven't told anybody. But now there's an installer that installs everything for you. So feel free to go back to MetaTraders, run the installer, and I think I actually added a couple of bonuses on top of the bonus. So you might actually run the installer and it'll put everything in there, and maybe something that you're missing from previous downloads, or maybe you didn't install an indicator properly or something like that. That would all be resolved by the installer. Okay. What does this red line indicate? We talked about it yesterday that I need price to stay above if I'm going to make money on this. Okay. For the upward move to continue and for us to move up and challenge resistance again, I think the way I said is, if this is still a bull trend on the short term, okay? If there is a trend, let's just say that. If there is a trend, we don't even know, because the other thing is, there might also be a range. Oops, range. Okay, so first of all, I'm set to make money only if there's a trend. So if there's a trend, it's going to do this. Therefore, this is the sort of my Alamo. Okay? This is my Alamo. I understand when we're up here, it's very likely to come back. But if I'm betting on a trend, then I'm assuming this is going to make a higher high. And if it's going to be a higher high, I can't have higher lows. You understand? What's it called? I don't know. A confluence? Okay, so anyways, that's that. If it makes a lower low, I'm kind of screwed. Okay, so there's only two choices here. If it's range, it does this. I don't lose any money, but if I wanted a range, I should have taken profit here. Okay. Now I'm a bull, so even if I take profit there, it doesn't mean I sell. Okay. Right? So if I took profit there, then where would I look to buy again? Well, it's support. So if it heads back up, then I would probably be a buyer somewhere in here. Or if it doesn't give me an entry, then I'd probably be a buyer back down here, which just puts me back into the same trade. And since I don't need a 50 pip winner or whatever it was, then I think what I could do is trade even less and just let it do this or not do that. Okay? Because if I took profit here and then bought it here and then it collapsed down here, I would be back at break even again. As far as the two trades, one say makes 50 pips and the other one loses 50 or whatever. You get the idea, right? So it averages out to 0. So I might as well just do nothing, right? Like I might as well just do something. That's right. So you ran the new installer, the free new installer. Like, I apologize, guys. I'm the world's worst marketer. So I added all those bonuses to MetaTraders. Even the $5 account guys, everyone got it. Multiple bonuses, probably a month and a half ago, that I spent a lot of money developing. I added it, and then I didn't tell anybody. I was going to write a nice email, and I was going to roll it out 2 or 3 phases. I don't have time. So it's there. So whatever. So Freedom just went there and like, oh my God. Oh my God. Yeah, it's amazing. Sorry I didn't tell you. Sorry. Yeah, the tickle pips. It's pretty funny. All right. So you see what I mean? So I'm just sort of hero or zero, and maybe I'm just too lazy to do any more. But I know from sort of experience, the more I do, the less I make. Right? So you might as well just let it run. So that's okay for me right now. I know CAD moves on Wednesdays as well, and today is Wednesday, so that's good. So if I get my macro right, okay, think about it this way. If I get my macro right, this weakens, okay? And if my macro's right, what happens to oil? If the same macro pressures weaken Japanese yen, what do they do to oil? Yeah, oil goes up, okay? And so if I get my macro right on yen, and that correlates, we don't know, but let's say based on correlation, oil goes up. Based on that correlation, what happens to CAD? Gaming places, yes, of course. How could you not? I use both. I'm a wide open highway. Yeah, then this goes up, so then I get paid. So I got everything lined up. It's such a beautiful shot. I don't care if I don't make money, because I'm going to let this sucker run. So if I end the month of July at 0%, that's a good July. Okay, if I end at 1 or 2%, nobody cares. If it ends up at 0, nobody cares. So if I can get some shots and remove the risk, and I say, well, my worst case scenario, I don't lose money. But if I let them run and I get lucky, maybe I get lucky. I don't know. So you have to discern what your strategy is. Okay. Like when I was up 75 pips, should I have taken the profit? Would you have taken the profit up in here? That's legit. You can do that. Or do you, right? So that's your sure thing. You're sitting on it. Or do you say, well, I don't really need a 75 pip trade. It doesn't do anything for me. You understand? Like 75 pips is such a small trade. You're like, you might say, well, in July, it's meaningless. So like, right? So, but what if you turn this into 175 by letting it run? Or 275. And you get lucky, like, you don't really expect that to happen in summer, but sometimes it happens. Sometimes somebody says something, Trump sends a tweet, something happens. And you're like, well, son of a bitch, that was great. Didn't really expect it, but I made 275 pips and I barely did anything on this trade the whole entire month. So yeah, it took you 4 or 5 weeks, but you're like, yeah, but I didn't do anything. It wasn't hard work. In one day I entered the trade. The next morning I moved the stop to break even, then you're done. And you're like, I can do nothing all day, every day for 4 or 5 weeks straight. And then you're like, oh, and boom, I made almost 300 pips. 1% on one trade. You get a couple of those, you're like, oh shit, July turned out to be pretty good. Hey man, a 3% in July is a great July. So I might as well go for that. Right? Because if a client looked at you, you're like, how come you're 0% in July? You're like, well, I killed it in June. Then since the Fed meeting, I expected this hard and fast profit taking and consolidation. And then July, at least half the market's on vacation. So I decided not to take any big risks in a market that is by and large dead. Why would I gamble your money, ma'am? That would be irresponsible of me. And I've dedicated myself to ensuring you continue to be filthy, stinking rich. And she's like, look, 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 thank you. Drinks her champagne and off she goes. Happy, satisfied client. Okay? So you might be like, I need the money. All right, so 75 pips. Okay? But here's what you're doing. There's no shame in taking the 75 pips per se. You need to describe your strategy in the summer then is income based. Okay? You're not really looking, right? You're not really looking for anything more but, rabbit stew, putting bread on the table today. Okay? If you're going for 300 pips or more on a trade, this is capital appreciation. This is asset appreciation. Okay? Completely different strategy, right? You understand? Now, typically, I do the asset appreciation thing. Think of this as a fund or a portfolio or a position. Have you ever read that like George Soros is taking a huge bearish position in US dollar? Have you ever heard of that? Okay. It's not going for 75 pips, right? So, or that someone's cornering the market in silver. What is it what does that mean? It means they're taking a giant position and holding it. Okay? And so you're not earning interest like a bond. Okay? You're buying the asset and hoping the value of the asset goes up. So in the summer, you have to decide, are you still an asset appreciation investor? Or are you an income-based trader? Okay? Well, Buffett, yeah, takes positions. In fact, he buys the entire company, so he's all in. He doesn't buy, 12% of a company and hopes the management team continues to make money and he receives some dividends. He's not even interested for the stock really going up. He wants to buy the whole damn company. That's an all-in trade. That's as big of a position as you can make. He buys everything. Okay? So that's all about asset appreciation, because then he believes if he owns this asset, he can run the asset or if you think of it as real estate, he can improve the asset and increase the income. So you can't move the apartment building. You can buy the entire apartment building, right? You can't move it. You can't change the neighborhood. You can't move your apartment building to the beach, but you can renovate every single apartment, and you can put in a swimming pool, and you can put in beautiful landscaping. You can put marble in the lobby, and then as rents roll over, which is a benefit of owning multi-family properties, is every year basically people's lease expires, and you're like, oh, your lease expired. Hey, great. By the way, rent just went up 30% because this place is beautiful. I pimped it out. I can't afford it. Well, then get the hell out. Rents just went up. It's beautiful. So now you increase the income. Okay? So going back to this, you have to decide which one you would like to do this summer. And if you haven't made a decision, then you don't know what you're doing. You don't know when to take profit. So I don't imagine many people are going to admit it, but if you're in the situation where you're like, I don't know when to take profit. Well, you don't know what your strategy is. How do you want to handle low volume and volatility? Do you want to pick up quarters off the sidewalk? Okay? You got 50 pips today. Good, take it. Look, nothing wrong with it. You made money. But now someone else might say, well, yeah, but now I got to start over tomorrow, and these trades are not coming at me hot and fast, so I have to do it all over again tomorrow. And for what? Another 50 pips? So remember, I said you need to plan big. Okay, you guys remember that? And expect small. So the way I kind of interpret that is, my plan on this trade 2 weeks ago was that there's going to be some more up than down. Why? I don't know. I freaking guessed. I'm a bull on macroeconomics. You understand that. You know what direction I want this to go and why. We cover it every day. And you should also know what direction I want USD CAD to go. Okay? So you already know what I know. You already know me. You already know my opinion for whatever that's worth. Okay? So I'm now deciding income or appreciation. Okay? And I've also declared which one I am. You knew that 3 weeks ago. 4 weeks ago, right? Which means planning big is you don't just start becoming a scalper that's reactive to the market. So a scalper's like, oh my God, look at these big green candles. I guess I need to buy, right? Well, I made all these pips. I made them. I made every single one of those pips. A scalper's now reacting and trying to figure out what they want to do with the rest of their day, or trying to figure out what to do the next 4 hours. I just made all those pips. Those are all mine. I'm already getting paid every single one of those because I have a big plan. And the big plan is I still analyze and set up the market to be congruent with my bias, which is my trade plans are still good. They're good, solid plans. Okay? I'm long-term with the bias. Okay? So long-term, this trade is a long-term trade. Well, based on a long-term analysis of the currency pair, based on my macro that develops my bias with currency and commodity correlation, with the calendar in mind. I told you on Monday that Friday CAD's going to move, so I even got the calendar, which is, I guess, Cali News. Okay? And what did I enter? A swing trade. Okay? Okay, you see? Like, it's still a good trade. It's a big plan. It's still a big plan. I'm just not expecting much. So I might as well remove my risk and let it run, hero or zero. But I could also just scalp it. Pick up 75 pips on Monday, and maybe I'm picking up another 75 pips today, and you're like, so I'm up 150 pips. Cool. You're probably even making more money than I am. Awesome. I work less. And also, how about this? Think about it this way too. Instead of trading, like, say, a $2,000 account, what if you were trading a $20 million account? Would you treat these situations the same? Would you still be income based? Dude, you're earning 2% sitting on your 20 million. Plus, you're earning 20% through profit sharing with your client, right? So if you do nothing, you're going to make $200,000 a year. Cool. So maybe you're like, you know what? I don't need 75 pips on that. My client doesn't really care because you're not over leveraged. It's not really big money. They're not even going to really notice it. It's not really going to do much for you. And you're scared to death of losing money, right? Oh my God. You're like, ma'am, I'll ask $4 million. Like, what? So you're like, you know what? I'm in. This was a hell of a trade. This says up. Okay? This says up, and you pulled the trigger here on a 1, 2, 3. Oh my God, beautiful. Off the central pivot, right? You're like, you know what? That's a big ass trade, and that's good. And I don't want to mess with that. I'm sitting on top of the weekly, right? So this is all a week. This whole thing is the weekly buy zone. You're like, you know what? I'm good, man. I'm good. I'm going for 300. You can go for 75. I'm going for 300 because that would actually show up on the radar screen for my client. And if I don't get a trend in July, no one expects a trend in July based on beta analysis, not your alpha, but the beta. So they're like, right? Someone might actually say, wow, look at July. It was terrible. Or I guess we'd have to go up to here maybe. Okay. If you analyze this, if you analyzed it this way, oops, gee whiz. I clicked every wrong button you can click. Let's do it this way. All right, there you go. Maybe one more click. Nope. All right. All right, so you look at it this way. What's happened in the last 5 weeks? Oh, uh, 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 uh. And so what's likely to continue happening? Probably something like that. Okay? So if someone was analyzing the market in general and they say, well, there was, right, zero. Bulls would have bought here, bears would have sold there, break even, break even, break even, break even, break even, break even, whatever. So ultimately they say the beta is equal to 0. Okay? And if your alpha now is equal to -4, they're not going to be happy. If it's +4, they're like, what the hell happened? Holy smokes. It'll actually be a concern. You'll have to explain how you did it. And you can say, well, I bought here and exited, bought here and exited, bought here. So I used an income strategy for July versus my traditional capital appreciation model. And they're like, son, not only are you beautiful, but you're amazingly talented. And you're like, I know, right? Or, here's the point, or you took one trade and moved your stop to break even, and you had a chance, you had an open net, you took the shot, yeah, the wind blew it out of the way. Oh, all right. So the client comes back and they're like, well, nothing happened in July, so how'd you guys handle it? And we're like, well, we didn't really see the opportunities that we typically trade, so we stayed conservative because our risk management is so stringent. We're so risk averse that we ended up taking a few shots, but we managed it well. And of course, in this market, it collapsed, and we had an opportunity, but we didn't. But we matched, our alpha matched the beta, and that's what you'd expect. They're like, cool, right on, good job, right on. Okay. Of course, your mom's masseuse is not going to think that way. But I'm trying to teach you how to get, more sophisticated investors with deeper pockets. Okay? Okay? So, if with your $20 million fund, you do 3% a month, at the end of it, you have a $30 million fund. Okay? Meanwhile, this whole period, you put $200,000 in your pocket as management fees. Okay? Right? Plus you made 10 million because that's 3% compounding over 12 months. Gets you pretty close to 50%. So you made 10 million for the client, but you charged, right? You charged 20%. So at the end of the year, so you got management, and then you got 2 million, right? And profit sharing. Okay. And you're like, okay, so you walked away with 2.2 M. Your firm anyways. I don't know if you have to pay, you have to pay taxes, you're going to have to pay rent, you're going to have to pay expenses, you're going to have to pay employees, but at least your firm earned an income of 2.2 million. So would you take the 75 pips, or would you just simply enter big trades and hope they take off? And do you have the patience to say, well, I bought it at the end of June, and then in October, it moves up and you're up 300 pips. Are you willing to wait that long? Well, it depends on what your strategy is, because it's going to affect your risk management. It's going to affect your trade planning. Okay? It's going to affect everything. Your point of view, your outlook, how do you look at the market? Okay? So I'd be tickled pink, tickled pips, if we can get above that. In fact, at some point, we're going to have to challenge 80, right? So the real thing is, can I get this above 80? Well, fine. We'll find out. Client gonna have to give me more back than 20%, 25%. Yeah, well, but then Anthony, typically what you do is you get rid of your management fee. Okay. So let's put this into perspective, Anthony. So I've spent, for example, more than $200,000 a year on compliance. Okay, this goes towards lawyers, accountants, what do you call them? Bookkeepers, mock audits. Okay, annual audits by an outside firm. Okay, not your team. You have to be audited from the outside, right? So annual audits, and then you have monthly, quarterly, and annual filings. I'm missing one other thing. Oh, you need your compliance team. Actually, do I have that? Well, I said 200,000 in compliance, but you actually have a compliance team that does things like your board meetings, your disclosure documents, your monthly, annual, your monthly, quarterly, annual reports. They do all that and file them for you. All your documents have to be updated. Your process has to be done. You have to do anti-money laundering exams every year and all that kind of stuff. So they often, they make sure you're all that. So you should budget $200,000 for that. Okay. So Anthony's like, I'm going to get, he wants 30%. Instead of 20%. I don't know anyone that would pay that, by the way. But because just of competition. Okay. So if you say, well, I want 30%, because here's usually how this goes down, Anthony. They're like, I want to give you $20 million, but I don't want to pay the 2%. You're like, dude, seriously, you don't want to pay that money. It's amazing, right? What a cheap ass. Now, the interesting thing is it keeps you from getting desperate and gambling in their money, but you're going to get this all the time. So usually what I tell them is to go to hell. You don't pay that, I'm not interested. Okay? You're going to nickel and dime me on my management fee that keeps me conservative to avoid me gambling your money? You're trying to save $200,000 on a $20 million deal? You're full of shit. You're not going to do the deal. So anyways, that's what you should say. Usually what you're like, oh, I'll do anything. Whatever, you just lost the deal. But usually what goes down is then your counter offer is, okay, I'll remove the 2% management fee, but then you owe me 30%, eh? And then what they say is, well, maybe 25 and whatever. Okay? So now you get the higher thing, but now you're covering all of this. And if you have a down year or a sideways year, who's paying your rent? Who's paying your salary? Who's putting shoes on your kids' feet? Who's paying for the lawyers, the accountants, the bookkeepers, your compliance team? Who's filing all these audits? Who's just paying the fees? Because you have to be, let's say in the United States, a member of the National Futures Association, a Series 3 registered principal, probably with the 64 now, right? There's a Series 3 and there's another one. Then you got to register your firm as a Forex trading firm, right? So you're not just a member, but you're also a principal. Your company is a member. You're a principal, so you're a member. You have to be registered and regulated, right? Your firm has to be registered and regulated, and then you have to declare yourself a Forex trading firm, which of itself is regulated in a different way. And guess what? For some reason, as a Forex trader, the NFA fees are like triple the expense. So you better know what the hell you're doing is all I'm saying. Like, you better know what you're getting into when someone says, I don't want to pay your management fee. And what you need to say is, I don't like working with you. Imagine now you have sort of a mediocre period, and on a $20 million account, you're down 200,000. And you're thinking to yourself, right? You're thinking to yourself, well, it was only 2%. It was kind of it was a tough month. What's this guy going to do? Call you up and scream and yell and profanity and pull his money and all that? You're like, whatever, dude. MoveOn.com. You don't want to pay the management fee? I don't want to make you 50% a year. Okay? It's pretty straightforward. But almost nobody has the guts to do something like that. The best thing you can do, and I'll teach you guys when I do my mastermind group, the best thing you could say to an investor is no. I'll teach you about that. Gary, yeah, no. A hedge fund's not an LLC. They're very complicated structures. Okay. So anyways, hi, sir. Do you use highs and lows of the day when you trade? Sure. I mean, it's all support and resistance. That's right, Jimbo. Jimbo! Jimbo. Yeah, sure, Master Trader. Not a problem, man. Anything you want, you got it. Anything you need, you got it. All right, so let's move on. So you get all that. So no, I haven't put you in a trade today, but I've taught you some of the most important lessons a trader could ever receive. You're welcome. Hi, Wayne. How would you handle people that run away with... I don't even know what you're talking. What do you mean run away with funds? I would kill them. I don't understand the question. All right. Gold. Yeah, it seems pretty complicated, huh? See, that's why I think, like, women know this. Men don't. Men are stupid. Men are like, just give me a list. Just write it down for me. Don't put a lot of words. Just give me a bullet point or two. Right? Like, men are stupid. Women get much more nuance out of a conversation. They're much more intelligent. They can handle much greater detail, and they can do multiple things at once. Men are just stupid. So women know instinctively, but also through practicality of life, they know all about the power of no. But it's also like one of the most important things that will be influential on your wealth is how poor you stay. You need to stay broke as long as possible. And the broker you are, the more money you're going to have. And it's the same paradox that I show in my book, where if you do the spreadsheet, the less you pay yourself, the more money you make. Right? Which is a weird paradox. But when you get to the point where you need to go out and do a raise, like you're going to raise a fund, you're going to do, you're going to talk to clients and bring them in. Women are way smarter because they know right away, right? The power of no. Men are just like, just tell me what you want. That's all I need to know. What do you need to give me money? What do you want? I don't want to pay your management fee. Okay, you don't have to pay a management fee. Dude, you just killed the deal. Dude, you fell for the most basic trick. The guy's going to give you 20 million, but he doesn't want to pay you 200,000. Dude, it ain't going to happen. I'll do anything. I just need the money. Just give me the money, please. I need your money. Just give me your money. I mean, it's a trap, man. It's a trap. But it's not even that. It's just like, dude, if you don't have the power, if you don't have the discipline to say no to a bad deal, you don't have discipline, and you will reek of being desperate. Reek of it. You'll stink up the room with desperation. And people will come in. The rich person will walk in and go, oh, what is that? You're like, hi, my name is Wayne. I'll do anything you want. Just give me your money, please. I'm like, oh my God, this place stinks. Woo-wee. I'm going to have to pass on this meeting. Something just came up. I got to go. Think of it, guys, right? So anyways, we'll get you there. Whatever. All right. So I hope that's fun. I think some of you guys probably just hated that whole conversation, but I hope it's fun. Try and get your head screwed on straight if that's where you're going. If you're not going there, then just focus on your income. Make your 75 pips and then set up the next trade. Yeah, Julie's catching fat rabbits. Well, that's the idea of patience and discipline, really, right? I don't know why you don't have one, Hilbert. I'm not going to enter every single trade plan for you. That's not my job. Okay? All right. So that, anyways, gold. I guess what we have to say is what's next for gold. And on this time frame with this analysis, I don't know. You have to understand that. I don't know. Let's maybe change this a little bit and say, from a different point of view, where's gold going to go? Okay. And I think I have to refresh it. Okay. And is that still right? That doesn't look right. Hang on. Let's do it this way. Okay, much easier. All right. So if you're a gold bug, it's not going to go much beyond 1850 this month. Okay. Julie's happy. I love it when Julie's happy. Master Trader says, Wayne, I like your trading on the Wix methodology. Cool. I've only been doing it like 20 years. You're like, cool. Right on. Okay. So here's the thing. I'd like to have a hedge fund with 25 or 30 of you guys that are just slaying it because you're patient and disciplined and you can actually trade properly. And then I'll be the guy that runs around raising the money. and bragging about how awesome my team is. But I've been trying to do that for well over 10 years now, and I've tried it a couple of times. I'm still waiting for my 25 that can just do it. That's the thing. Right? So the catch is, the catch typically is you do this and you're loving it and you're making tons of money, so Julie's happy. Then the market does this and Julie keeps doing what she did do. And I'm not picking you on you, Julie. I'm just an example, okay? And then the trader keeps doing this, and at the end of the year, they made money in an uptrend because they're bulls, but then they lost money in a downtrend because they're still being a bull. Okay? And meanwhile, we'll say Maida was a bear, so then Maida was losing money here, and then making money here, and then losing money here. And at the end, I have this team that ends up with zero, right? And I'm like, oh my God. You're like, well, I was killing it here, and then something happened. I just, and it all goes away. Okay? Yeah, June. Yeah, it's really that difficult. For some reason, just people don't do it. I don't know why. People just don't do it. It's hard, I guess, or difficult or something. So I need a team that says, well, during bullish times, they're bulls. And then during bearish times, they're out. But unless they're bears, then during bearish times, they're in. And during bullish times, they're out. And therefore, I have a diverse team where when the market's going up, we win. When the market's going down, we win. And often, though, and often in sort of the transition, both teams kind of break even because they're taking shots down or they're trying to get up, and there's just this troughing period. But that's what a trough is, right? Profits, right? And then whatever. So I don't mind the break-even stuff because the small winners pay for the small losers sort of thing. And then you start looking at this, right? You get a normal distribution, but the distribution ends up being different where you do have some big winners, but they pay for all the massive little losers. And you actually end up living in this area, right? So you have, let's say you have significantly more little losers and you have several, many. You have significant little losers. You have many big winners. And at the end of the year, you get this normal distribution of, whatever. Just, you'll get it. I think you get it. Joe says, if the Australian economy extends lockdowns for the next week, yeah, that would be bad. Okay. Yep, that would be bad. Okay. So, people have been buying Bitcoin at 9,000. Okay. The upside of the range is 10,000. They're very sophisticated traders, huh? And the rest is just noise. Yeah, guys, don't do silly things like gold and Aussie dollar. I don't even think that's very true. You might be better off with South African rand, but yeah, like don't follow rules of thumbs like even things like oil and cat. I know I threw that down today. There is a correlation, but it's really more all commodities and not just oil. Australia is much more complicated than just gold. The RBA literally tells you what's going to happen with the currency. So you don't go on a rule of thumb. Go, I know I'm guilty of saying gold and Aussie dollar. I mean, there was a time, if you look back in 2005, I labeled my chart. I actually had my chart labeled. This was before MT4 was even invented, by the way. Um, on my charting package, I had, they were called workspaces back then. I had a workspace for Aussie dollar, but I had another one very similar to this, and I just called it gold. And it was Aussie dollar, but I traded it like gold because back then you couldn't trade gold like we do now. You had to trade the actual futures contract. Now, back in the day, so we'll talk about expenses here again. Back in the day, I traded gold and oil and a few other things. I think I did 10-year T-note futures. Those would have been the big ones, and S&P 500. So I traded S&P 500. And actually, you know what? I think it was Dow. Dow was cheaper because I think Dow had minis or something. But anyway, so I traded stock index futures. I traded gold futures, oil futures, and treasury futures, specifically the 10-year T-note. And on top of that, I traded Forex. Okay, this was back in the early days when I turned independent pro, right? When I left my VC firm. So I get this tax bill. Like, first of all, we couldn't file it on time, so we got an extension. Then we got another extension. Then we got another extension. I'm like, ooh, this is, and of course I'm paying money too, right? And then finally I get my taxes, and I'm not kidding. They were like hundreds of pages long. Hundreds of pages long. And I'm like, oh my God, why is it so big? And what they said was that Forex has one tax treatment by the IRS. Stock indices have one tax treatment. Commodity futures have one tax treatment. And financial futures have one tax treatment. So they're like, we're actually filing 4 or 5 different tax returns because they're all treated differently by the IRS. What? Right? So then I said, holy crap. Because, you know, it costs a lot of money to do, when your taxes are that thick, you're paying accountants and lawyers, all this stuff, right? So boom, it cost me, $15,000 to get my taxes done. So anyways, so I said, well, screw that. Because I said right away, I don't need to trade gold futures. I can trade Aussie dollar because back in 2005, there was they were very highly correlated, and I actually had the numbers done, and it was almost I think it was like 0.92 positive correlation with the Aussie dollar. So I went to my Aussie dollar chart and I actually just relabeled it gold. And so I was guilty of just trading Aussie dollar like it was gold. But at that period, there was a very, very strong positive correlation. Now, correlations can and do change. Okay? So now, in today, trading is so easy now and so cheap now. And like even the carrying costs or the trading costs are so stupid cheap that you're paying 2 pips on a trade. It's so cheap, it's ridiculous. You have nothing to bitch and complain about. And everything is so regulated and stuff, and the market is so competitive. Like, everything is so awesome right now as a currency trader. You have nothing to complain about. So now you can just trade gold, but I wouldn't do something like, oh, gold and Aussie dollar are the same. No, you have gold. It's on your chart. Just trade gold as gold. And you're going to be taxed the same way. It's not a futures contract and all that kind of stuff. Like, dude, it's so easy. Just trade gold as gold. Do your fundamental analysis on gold. Don't just call it Aussie dollar. That's so 2004, 2005. Okay? So, but if you're like, well, Wayne, you did a YouTube video in 2006 and you called it. Well, dude, we're not in 2006. Time to grow up. Okay? What trading platform did you use back then? So I used GFT many years. Okay, but I think my first forex trading account was a young little startup called FXCM, and I had to wire $5,000. It was the minimum you could send to them, and they couldn't take credit cards, obviously. So you had to wire $5,000 minimum to FXCM. Imagine you said that now to somebody. Oh, you got to send us $5,000 minimum for your mini account, and you got to wire it. People just wouldn't do it. Well, it's too difficult. Good. Okay. Yeah, so at GFT I had my own dealing desk. So I was a baller. I don't know if anyone else actually had their own dealing desk but me. So right, full-time, multiple staff. Their full-time job was to clear my trades. Is that right, Cave? Yeah, they were pretty good. And the deal book, what was his name? Mohammed, who actually created the deal book. He went to Gain Capital, I think. So anyway, so Mohammed had created this great trading platform, very similar now to MT4, and probably MT4 was sort of a knockoff. So they were the first ones that really had this idea of having multiple workspaces with multiple combinations of charts, and each chart would be different from other charts. So on one chart, you'd have this template. So that's a template. And then on a different chart, you had this one. You can see it's a much different template. This one has multiple pivot points. It's got moving averages. It's got PSAR. And then, so on and so forth. And it would always be there. So if I went to Kiwi Dollar would look different. It'd have a different combination of charts. And then I would go back to Pound Yen. And once again, then it pulls that up. So Mohammed had created Dealbook, and then Dealbook FX2, and then Dealbook 360. And it was all just like this. So you could have a workspace with multiple charts with multiple templates, and of course you can have each chart individual any way you want, different currencies, different layouts, and it would save it all. The downside, by the way, I hate auto chartists. I'll tell you a story about them. Hang on. So anyways, now you get, right? But the problem is the way that Mo had programmed it, it was running every single workspace, every single chart was running in the background. Even if you weren't looking at it, you were pulling data off the internet back when you had, 2 megabits per second. It was running this. It was killing your processor. So you would have, I think once you got to about 50 charts, your processor would just blow up. It would just freeze. Your computer wasn't. So I had like a $5,000 trading computer because I was running GFT. I needed the processing power. I had the first liquid-cooled quad-core 6-screen computer ever made, probably. $5,000 just to be able to do what we're doing now. And you can do this on a $99 computer. So MT4 came along, and it had all the similar features. But the interesting thing about MT4 is if I pull up Swissy CAD Swiss, right? Watch this. Well, it's so fast now. It wasn't running it in the background. Okay? Okay? Very interesting, right? Now, how about this? I'm at Traders Expo 2005 or 6 or something. And I'm one of the speakers and all that kind of stuff. And I'm rolling through New York City like a baller, right? Cool. I'm going big because I'm having fun. And I meet some dude from, I think he was South African, and he's like, hey, I'm with AutoChartist. I'm like, oh, I've seen your software. It's interesting. And he told me all about it. He was really excited and all that kind of stuff. I'm like, hey, let me show you around and introduce you to people. I said, you're probably here. You're going to need to meet some brokers, right? He's like, oh, yeah. We need our brokers to license our software. I'm like, oh, I know all the brokers. I know them all. Let me show you around. I'll make some introductions. He's like, oh, that's really cool. And I say, well, so what do you think about New York City? Have you been here before? And he's like, I've never left South Africa before. Oh, my God, this is your first time in New York City? Oh, it's amazing. This is a unique city. I've been all around the world. This is a unique city. You got to see New York City. Okay? I said, I'll tell you what. I'm going to introduce you to some people. I've invited some key players in the industry to go on a tour of New York City in a white stretch limousine. Why don't you come with us as my guest? This is a true freaking story. Okay? It gets better. He's like, really? I'm like, yeah, you'll meet all the people that you flew here to meet, and you'll get to see New York City in the back of a white stretch limousine. He's like, oh, that's so great. Good. So so we fill the limousine. We take him to Wall Street. He gets his picture taken. We go to the ice skating rink with the golden fountain at, NBC Studios, and he gets his picture taken. And, I'm having conversations with him, too. I'm like, hey, do you recognize this? Oh, yeah, well, up there is where they do Saturday Night Live, and you should, the Rainbow Room is over there, this is Midtown. And then I'm like, wait till you see what's next. I'm going to take you through Central Park. So we get in the limousine. We all go through Central Park. And I'm like, oh, this is amazing. And then, hey, well, we're going to stop at one of my favorite places. We're going to have lunch. Carnegie Deli. So on the way back out of the park, the limousine parks in front of Carnegie Deli. We go in and I buy lunch for 30 people. And it's even funnier, too, because I come out of buying everyone lunch. We sat down for this big lunch. We took the whole back room. Then we get up there, and I'm buying lunch for 30 people. Matzo ball soup and pastrami sandwiches for 30 people. And she's like, we don't accept credit cards here. And I'm like, what? What do you mean you don't accept credit cards? She's like, look at the sign. It says cash only. And I said, look outside that window. You see that white stretch limousine? That's mine. She's like, come with me. So we go upstairs at Carnegie Deli. No one ever gets to do this. We went upstairs and they have this tiny little office with a little credit card machine. Boom! Nice! Love it. Take this all the way back, and that's his day. He meets all his people. The next day I said, you know what? I like your software. I don't like the signal aspect of it, but I like the idea that if a rising wedge is seen, it pops up, and we can use this as an education tool. And I'm like, I'm an educator. I'd like this to be like a learning experience, like building muscle memory for younger traders to say, look, a rising wedge, or look, a 1, 2, 3, or look, a head and shoulders. So I said, here's what I would do. And we sat down and I said, I would do it like this and I would do it like that. We'd have this training course and we'd do this and we'd have a model. People would pay this way. And I outlined this huge plan of how we can work together. You know what the son of a bitch did? Did the exact thing I outlined with Rogge Horner. What kind of person? Did my exact plan. The exact plan. Yeah. I'm like, what the WTF? What are you talking about? What? That's it? Like, I mean, I have a contract with him. We never signed it, and all of a sudden, boom, Rocky Horner's doing the deal. Amazing. That was like, oh my God, right? I know business is business, but I was personable on this one too, right? Yes, the cartridge is all we got. But it's hard to imagine, right? It's hard to imagine. It's hard to imagine. Whoa, you're kidding me. You're kidding me. Yeah. So I don't know whatever happened to the company, but amazing, huh? Yeah, she's cuter for sure. So, anyways, just funny, huh? So there's the history of Forex. If you were wondering about the different platforms and the different tools and the different players and all that kind of stuff, huh? But just amazing. But boy, we had a great time. It was a great day. But I can tell you the spot where we sat at the Marriott Marquis on the mezzanine level with all the seating everywhere and the big room above you where we sat, and I laid out everything they needed to do to be a success. Amazing. All right, cool. So we did Bitcoin, we did gold, we haven't done oil. So let's go back. Let's do oil. Yeah, the thing called Forex. That's it. That's it. All right. Okay, WTI. My, oh my, WTI. So I need this to go up, as you know. Yeah, the sandwiches are crazy. I have another story about Carnegie Deli. This guy, again, a different year, but I'm at the same place, Marriott Marquis, New York City. At a Traders Expo. I did this big presentation about something, and some guy came up to me after, and I mean like not outside the room, but at the trading booth, right? So they came out to the floor, and I had a booth there as a sponsor of the show. I think I used to spend like $200,000 a year just going to shows. Anyways, so he comes up to me at the booth and he said, "That's the most amazing thing. I think you've changed my life. This is this. I'm like, whoa, settle down, dude." The guy's like perspiring. He had run to the booth to say this to me, and I'm like, "Hey, that's really cool. Just stay small, stay humble, focus on the long term." And he's like, "I want to buy you a gift. I want to buy you a gift. When are you leaving?" I'm like, "Actually, I'm going to be leaving in about 45 minutes. I'm going to jump in the limo and head out to the airport, and I'm out of here." And he's like, "Really?" I'm like, "Yeah, about 45 minutes. I'm just saying, just." And he's like, "Wait here." I'm not joking. So he runs across the trade floor, right? The expo floor, goes down the escalators, gets the elevators, goes down the elevators, runs out into Times Square, and runs to Carnegie Deli, which is, dude, 7, 8, 9, 10 blocks. It's not, it's doable, but it's pretty far. And he's running. Walked in some deli, I don't know if it's Carnegie Deli, but walks in, buys an entire cheesecake. Beautiful cheesecake in a box and everything, and then he runs back down the street, block after block after block, through Times Square, pushing through the people, up the elevator, and then you got to get out, and then you got to go up the escalator, and he's running across there, and he's like, oh, and he's drenched in sweat, and he's like, "Cheesecake! I got you a cheesecake!" I'm like, whoa, dude. Yeah. Public speaking. Yeah. Public speaking. You imagine if you were a celebrity? The crazy stuff that must happen to a celebrity. I ain't no celebrity, but man, it must be tough. The love and the hate you get from people. If you're like, I don't know, Brad Pitt, you imagine just walking down the street and there's probably someone that just hates him. He hates his movies, hates who he is, hates his lifestyle, hates his haircut, just hates him with, you're like, whoa, dude. Anyway, so this guy was awesome. So we cut it up, and I had all my volunteers, shared it with all my volunteers, jumped in my limo and went home. Yo, it was funny. Like, it was funny, though. It was totally funny. All right, so oil. Well, we know that's resistance. So in the smaller time frame, it's been working its way up. Okay, we've been struggling with 41, and we know that's a challenge. And we're sort of almost there again. So the concern is that we don't have what it takes. So you go out to a higher time frame, and it's slowly heading up. But the thing is, we're caught. You see what we're caught on? Those silly little pivot points, right? Those silly little pivot points. So here we are. How toppish is it? Well, let's go out to the day. And it's one standard deviation from the daily mean. We don't need this at 32 anymore. Okay, so we're one standard deviation from the daily mean. Okay, so what that means is from this point in time, okay, from this point in time to where we are now in time, when you look at the average price of oil over that time and look at how far oil has drifted from that over the period, that this move that we have here to here represents 95% of the expected move. Okay? Okay? So you have to put that into your process, okay? And then you zip in a little closer. And now you use further technical analysis. We know technically this market is bullish. Now, isn't it interesting that the crossover happened probably at the exact mean? I wouldn't be shocked if that's exactly the mean, which is kind of interesting. All right. I'm just wondering, like, ooh, maybe that's why the 21.55 works so well. Maybe it's pretty close to the statistical mean of every time frame I look at. That's interesting. But we'll see. So now, using moving averages, we know that as long as we maintain our trend above the 21, I am bullish and aggressive. Okay? So if I'm going to stay bullish and aggressive based on my bias, but nothing else, my fundamental bias, then we're going to, in that case, if I'm right, we're going to ride over this course of period, over this period of time, we are going to stay above the 21 EMA. And then I see there's a psychological level which will probably kind of meet us around 2 standard deviations from the mean. And I think that's 98% of the expected move based on statistical analysis. So now, so I have to watch this very closely on a daily. So now, if you're looking on at daily pivots or weekly pivots, you might say, okay, there could be some down to this 38 level, but on the longer run, it would do a new up. If the uptrend is going to maintain its integrity. You get that? So you have to think short, either the short term up and then a pullback, or a short term down, which produces an up. Is it 2 standard EV? Oh, I'm sorry. So this is 68%, and that's 95. All right, my bad. Right? This is 68, and this is 95 then. I'm sorry. Is that right? Oh, yeah. Thank you, Bobby. Yeah, 68 and 95. Cool. Sorry about that. So either way, this is overbought, but it doesn't have to be the end. Okay? Okay. And up here, it may not probably be the end, but it statistically could be the end. Anything beyond that would be considered an outlier. But what you would do to handle that as a trader, because remember, you're not really a statistician in that case, you would anticipate a change in the slope of the mean, which means you just drop into a different time frame and say, well, it's probably gone from bullish to bearish, right? So if you're outside here, it's not a statistical outlier, but more like a change in the slope, mx plus b. So your slope, your m, has changed, which means the market conditions. So if m was market instead of slope, you would say the market has technically turned bullish. Even though that's slope, I could argue that's market. I don't know. Okay. Okay. And then y, I suppose you would redo this and say trend. Okay. Equals the market. Okay. Times x. Okay. Plus b, which is the intercept. So you have your axes, right? I do this fatter. Yeah, if you were looking at this, you would be looking at it this way. Okay, so you're looking at the change for market is simply the rise over the run. The B is where you intercept, and the X is the axis of where you are on the grid. And from that, you would just say, hey, we're in the 4th quadrant or whatever this is up here. Okay. You get it? Cool. And it's cool that we have a formally trained statistician in our YouTube group now. So it's always good to have someone to check the math. Cool. So oil, you need to follow your bias, particularly manage where you are on the 4-hour 21. Okay. And then drop into smaller time frames and pay attention to what the price action is telling you. Okay. So there's 2 things going on here, because you're going to believe what you think, right? Perception creates a reality. So if you perceive oil being at the top, you're like, it's 68% overbought. So you say to yourself, or you think oil is overbought. I don't know if it's overbought. You think it's overbought, and that's cool. You might be right. I don't know. But if your opinion is down, you're going to read this as, on the daily, it's overbought, statistically speaking. You're going to see this as a selling price. That's what that is. And then you're going to see this as an old man easing into a hot bath. And you're going to trade it this way. Okay? Okay? That might be true. I don't know if it's true. But if you're a bear, you would set it up that way. Okay? Now, a bull might be concerned about that and say, well, okay, there's some support in here on the daily. Okay? Let's say that's the daily 21. Cool. Well, if that's true, okay, how would a bull want to play that? A bull's going to want to play it as an up, 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 down, 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 up, 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 up. And at the end of the month, both the bulls and bears, or in this case, both the bears and the bulls, would be correct. Okay? Both the bulls and bears will be correct. Now, the direction of the trend that plays out the rest of the month will dictate who makes more money, the bulls or the bears. But both will be profitable. But what happens if you're a pig? And you don't know if you want to be a bull or a bear. You don't know what to plan. You're not a bull, you're not a bear, you're a pig. Man, late in the day. Very well said. It's not about being right, it's about being consistent. That's exactly what I'm saying here. Pigs get slaughtered. Well, Bobby asked, when does trading volume typically return? It's not the right question. The right question is, when will it return this year? Okay. Would you like to know? How many people would like to know? Oh, whoa, you lost a lot of money today? Wow, how exciting. That day right there. If you think third week of August, you don't get it. You're not following. Now, that might have been true last year, but this year is not last year. Next year is not this year. Now, we will pick up, but it's not going to trend the way you would like. Master Trader, you have to insert a credit card, and I'll tell you. Join the group. We're probably going to talk about it a lot tomorrow. But anyways, I got to go, so I'm being facetious about the credit card. I just got to go. But you could do some research and figure it out. I'm sure you got it. Yeah, and the Master Trader of the course. No, but like, dude, you should already know. Like, to me, it's interesting that you don't know. You need to do some research. You need to figure it out. I mean, it's not complicated. That's the thing. So anyways, peace on earth. May the pips be with you. May your profits be above average. I want you to succeed. I hope you succeed. I'm pushing and pulling and prodding for you to succeed. But you're the one that has to make the sacrifices and the effort. And I hope you have what it takes, because I want to see you standing tall and proud. You could be the champion. You could be the best. You could be King Kong pounding on your chest. Or you can wimp out and die like a wet paper